Good morning, David Coombe here with the CBS AM Debrief this Tuesday, the 27th. No, it can't be the 27th. Must be the, let's check that again. Tuesday, the 27th. My goodness. Okay, I think I'm a little bit out of touch this morning. Tuesday, the 27th of September, nearly the end of the month, and boy, what a month it's been. Quite happily put this month behind me, in fact. Look, I'll get onto the debrief here. Just coming up on 8 o'clock here in the Sydney office, and it's really nice to see some green numbers here over to the left of the screen. We've got the Dow up 272 points, or 2.53%. That was all 30 components of the Dow that rose, with the financial sector really pushing highest of all. Some of the bargain hunters were coming in there, but also it seemed that the situation in Europe does look like there might be some resolution there, and although the leaders seem to be continuing to stand around looking at each other, exclaiming, well, how about doing something? That something indeed might actually be done there. And so we've seen all of the Americas in the green here, and most of Europe up pretty strongly as well. Again, some of the bargain hunters coming through there, and I was actually just looking at the CAC index there the other day, and I'll show that in a little while on the Falcon Trader. But it's actually only within 200 or 300 points of getting down to the post-GFC lows, and whether or not this warrants that, I guess, remains to be seen. But I think it's interesting to look back in history and see that what happened in the aftermath of the Argentinian debt default, and arguably that's a more significant economy than Greece. I guess you could counter that with the reality that Argentina wasn't part of a trading bloc like Greece was part of the EU. Anyway, I digress. Let's move on here and look at the rest of the indices. The SPY here has responded pretty favourably, up 105 to 3,984. The Hang Seng down 339, and the Nikkei up 120. I'll move on here and have a look at the commodities space. I know that we've talked about $80 being the level of support for crude. That could potentially be a trade there to get set here going long. You know your stock's going to be under 80 there. Natural gas $3.78. That's all but sunk, that natural gas warrant we issued, sadly. The rest of the commodities space pretty much all up, apart from orange juice, cotton, lumber, oats, and rough rice. The big movers there were wheat up 1.17, corn up 1.48, coffee up nearly 2%, cocoa up 1.67, and the big fallers there, as mentioned, orange juice and rough rice down quite significantly, and cotton down 1.52. Copper up 3 cents to $328. That's 0.3%. And gold continuing to lose ground, $1,594.80, and silver at $29.76. Currency pairs: euro buying 1.3532 US dollars, and the pound buying 1.5561. US dollar buying 76.39 yen. The Aussie buying 78.40. Now that does seem to be holding here at around 78 cents for now. The US dollar buying 1.0255, so the Canadian well and truly into the past parity there. And the US dollar buying 0.9014 Swiss francs. Have a look now at the economic calendar. New home sales came in at 295,000, just a couple of thousand more than expectations, and the previous was 302. So not a bad number there, although the month-on-month numbers in percentage terms was down 2.3%, expecting 1.7. We've yet to have Chinese industrial profits year to date out, 28.3 is the previous, and Swiss consumption index numbers out a little bit later on this afternoon. German consumer confidence, Swiss Institute's September economic forecast, and then GBP CBI reported sales for September. Then going into tomorrow morning, we've got consumer confidence coming out of the United States. Now that could be quite a significant number if it prints higher than expected. That will be certainly encouraging there for the US. Then we have some German CPI numbers also, import price index and durable goods orders for Wednesday night. Okay, let's have a look at the Balkan trader here. Now this is that CAC French Top 40 index. It's a weekly chart, and you can see here we're at 2800 or so, and we're about 300 points away from that low that was achieved during or just after the global financial crisis. So really does beg the question, does it warrant the being down here? If we saw a Greek default, which we haven't yet, then all bets are off clearly. But it is an interesting thing to reflect on to my eye. Moving on though, let's have a look here at the Aussie index. Okay, and you can see there's a considerable gulf that we would have to traverse, and that's from 3800 down to 3200 here, so a good 500-600 points there. We'll just change that back to a daily. And there we are here with that 3760 level from August the 9th. And we're yet to get down there, and at this stage it looks like this level here is going to hold as a level of support downside. Now looking at a couple of trades, picked up some Energy World Corporation the other day on a bounce up to 54, so I'm a bit underwater on that. It really came off yesterday. Doesn't seem to be wanting to hold here terribly much, so this is really just a bit of a bargain, opportunistic buy, but not working out that well at the moment. Obviously if we get down to the mid 40s here, it's well and truly time to be out of the trade. Another one I looked at jumping into yesterday before it took out this low here was Aluka, but it just continued to come off there. In fact, it lost about $1. We're now looking at this level of support here to potentially hold, and I would have thought that today, when we're looking at an up day, hopefully it'll do just that. But it really seems to be some reason that people are exiting from that trade. Speaking of exiting, of course, the gold juniors have all been dreadfully beaten up, and there's probably still opportunity here to be going short some of these stocks. This one here, Kingsgate's taken out this level of support here at $6.90 and appears to be in something of a free fall. Yesterday, Medusa gave up around 14–15%. And that's that's a big candle, that one there, by anyone's measure, down to $6.39. Huge move. We are potentially getting into some levels of support here, and of course we are shorting a company whose fundamentals are pretty good. These companies are still going to be making money at $1,500 an ounce. The extra $300 was just icing on top. Yeah, perhaps an interesting one to watch there. In fact, you could almost be thinking here with Medusa is the point at which we start to think about going long with stop losses below these levels here around $6. Either way, we're probably not going to see a similar sort of move up that we've seen on the way down, which is often the case, as we all know. Here's a little pretty speculative iron ore play, Legacy Iron Ore. An announcement came out the other day that a state-owned Indian-based resources company had taken a cornerstone investment in Legacy Iron Ore, but it seemed to be a case of buy the rumour, sell the fact. So that was promptly dumped after that announcement, down from around 20 cents down to 12. So that could be one to look at. As I say though, quite a speculative play. Not really any other place to put a stop loss other than sort of under this 10-cent level. So you're risking 20% already on the trade. So that's really only one for the brave. Just seeing what else there is here. ResMed on the defensives. A lot of these defensive stocks have done quite well. This is the local listing on the ASX. Also going to get support from the weakness of the Aussie dollar, or putting it another way, US dollar strength. And this is ResMed listed on the New York Stock Exchange. It's actually sort of been doing the opposite, but maybe it's a better trade on the New York Stock Exchange. There, maybe we're not seeing that currency variance priced into it at this stage. Just seeing if there's anything else here to follow up on. Probably not, at least not that's catching my eye. So we'll leave it at that for today, and hopefully a little bit of profits to be picked up today here, and we start to see some sort of normalcy here, but it seems experience says don't hold your breath on that one. Till next time, bye for now. I'm David Coombe. Thanks for watching.